Hello, this is David DT, Trading-to-Win.com. First quick public service announcement. If you're watching this video on YouTube because you were notified by your subscription email, or just found it searching YouTube, you're probably missing about 95%, if not 99% of useful information which Trading-to-Win site has to offer. We have a lot of intraday posts, like 2-3 posts every day. A lot of user comments every single day. A lot of videos I just post on a screencast instead of posting those on YouTube. So you're probably missing those as well. The bottom line is, if you're interested in what great community of traders do at Trading-to-Win.com, please stop by at the site, and while you're at the site, please don't forget that Trading-to-Win is ad-supported sites, so please check those ads, annoying ads. If you don't see those, turn off your ad blocker and check those out. Doesn't cost you anything, but you're showing appreciation and supporting Trading-to-Win.com operations. Now back to the charts. S&P 500 daily chart. As you can see, those are March lows right here. I'm not a big fan of Elliott wave theory, but I use D-wave, DeMark D-wave. So there were two alternate counts. That was beginning of A or start of 1. That was the end of A, beginning of B, and end of 1, beginning of 2. C ended here, but 3 was continued all the way up to, don't see target here, but target was in the vicinity of 1120, somewhere 1120. So if we look at RSI, we will see that current sell-off was the most powerful from the beginning of the rally of the March bottom. Here RSI did not cross 40, which is bull land in my definition. Right now is getting dangerously close to 40, but it still doesn't say that this is Elliott wave P3, which everybody is expecting. It might as well be the D wave 4, and it might go somewhere probably till this area. Those who stayed with Trading-to-Win.com for a long time, they know that we did not expect the ultimate top for this rally to come till at least January of 2010 due to multiple reasons, and recently a more precise date was defined. Kind of silly reason, but if we take Fibonacci retracements and put those on wave 1, 162 retracement here, and that huge main channel had to intercept somewhere at the end of January, to be precise, 21st, January 21st. So this is when I personally did expect something big to happen. Surprisingly, it did happen. This rising wedge, busted breakout. Normally they work much stronger in the opposite direction to break out. As you can see, this is TDST resistance line, blue one, closed above, down, above, down, above, down. 3 times is charm. So inability to close above TDST resistance line tells us that either we're going to have reversal in place or much longer consolidation like the one we had here. This one was under C wave target. And also people who stayed with the site for a long time know that on Trading-to-Win.com I said that what I do care about is TD setup, sell 9 on monthly might complete in January 2010. This is when definite top will take place. So we might be right there at the top. How far I expect this rally to go, I don't have TD sequential counts on this chart, but I probably would expect S&P 500 to go down to about 1047, which is TD's support of entire sequence of buy setup. Sell setup, sell come down. So we might go as low as 1047. This is yet another chart, Ninja Trader. Here you do see all waves, see ended here. And what is interesting, lines for waves, they serve as, in a way, mean, and price action tend to return to somewhere vicinity of that wave itself. Even in such a long wave as wave 3, you see price action touched it here, touched it here, touched it here. So it does serve as, in a way, kind of trend line. If we magnify it here, we will see that this was the target for wave 3. It was exceeded, but normally if you would go short right here, no leverage, just short and no time decay, the top at area about 55 or whatever it was, it's not that far off, only 3-4%. So you would have stayed in a trade, and as of today would be in profits. This is another illustration of nothing really happened from September, because in September 14th I opened example, not real portfolio, and the max loss on this portfolio was about 14%, which is not good, but it's not horrible. If you trade DeMark, sometimes you have to be prepared to about 15-20% drawdowns. And as of yesterday close, loss in portfolio is within 4%, and I would expect that portfolio to perform quite admirably in the days to come. Once again, this is basically a review video, nothing about tomorrow. What I'm trying to communicate here, you will benefit greatly if you will stop by at Trading-to-Win site and participate in discussion. You will have to have Discuss ID. Not a big deal, but there are a lot of traders, even on the weekend, who exchange information, a lot of charts. This is, I would say, paradise for technical trader. Back to S&P 500 chart. Once again, this is TDC support, 1047.30 something. Friday was bar 3 on the way down. We most likely is going to get some bounce on Monday. Now we're looking at 60-minute hourly chart. As you can see, TD buy setup completed few hours before close. It's probably going to be perfect. It was not perfect. Yes, it was perfected. So we might open flat on Monday or slight downside, and then we're going to have WB of the wave, and it's going to go probably all Monday and probably even into Tuesday, where I will reshort all positions I covered on Friday. And from now on, I will be shorting the rips and covering the dips. Hope to see you at Trading-to-Win.com. This is David DT. Have a great week.